Good morning. Hi, Tina. How are you? Good morning, everybody. Say hello. Follow Tina's lead. I am going to try to do double today, so let's see if that works. Planters will roll. Where are you at, Tina? I can't see it just by scrolling over your name. We had some people in the field last week. So I thought that was pretty crazy as well. Oh no, hold on. How do I shut that off? I'm not that smart. Iowa. Oh. Yeah, you guys aren't really warmer than us. It has been chilly for you, I've heard. Okay, I'm gonna see if this works. I go live on both of my pages and people comment on my Without the Bank page and I can't see them. So I'm trying to do two things at once this morning. We'll see if it works. I'm usually pretty decent at multitasking, but I am not decent at technology. I hate it, in fact. Not one of my favorite things. And so now it's already not working. Forget it. Forget it. Good morning. Hello, everybody. Okay, we are 6 minutes late this morning because I'm late this morning. Hey, Enrique. I am fantastic. How are you? I am 6 minutes late this morning, so I don't want to keep everybody too long. For those of you who are joining in for the first time, I am Mary Jo Irmen. I am the author of Farming Without the Bank and Life Without the Bank. And I teach the infinite banking concept, which was written by or developed by R. Nelson Nash. And he wrote the book Becoming Your Own Banker. So I typically refer to either any of those three books. So if you want to figure out how to basically live life without the bank, welcome. I am just going to go over clients that I have met with this week and give you guys a good idea of what is happening. All right. Hey, Josh, good morning to you. Where are you at? All right, we have first client I met with. The first client I'll go over today. I don't ever go over them in order, so I never know if you guys think that. Not that it matters to you, probably. But this was actually pretty interesting. She was farming with mom, dad, brother, and her. Quite a massive operation. Very large operation. And dad passed away. He was the one that made all the calls. He kept all the peace, right? Dad passes away. Now there's not peace because the brother wants to take control even though they are fairly equal partners. What was very interesting is when dad passed away, it's in a corporation, but now they are, and I don't know if it was before dad passed away or after dad passed away, But they argued about who was going to own majority. Well, he won. She gave in. He's going to have 51% ownership. She's going to have 49% ownership. And so it was funny that when she came into the meeting, she didn't want to talk about any of that. Because we just want to talk about ourselves and we don't need to talk about the corporation. This is how much money I get paid. This is what I need a policy for. And it's not that easy. I want to know the dynamics of what's going on because I want to know if we have to prepare, right? I don't do estate planning. I'm not an attorney. I'm not an accountant. I'm not a financial advisor. I am an infinite banking practitioner. And so, but everything that I do encompasses all of that. And most people do not look at that. So she really came in thinking, well, this is all I need is a life insurance policy. But then when I start asking questions, well, what's going to happen if mom dies? Sorry. What's going to happen if mom dies? What is he going to buy you out? Nope, I don't want to be bought out. I want to stay. I just want to run my portion of the operation my way because he gives me no credibility. Okay. So how is that going to work? When mom passes away, are we going to scream and fight about it? He's 51% owner. Is there a way that he can get you out of there and be snaky about it? Like, she had no idea. She didn't know the books because she's not the one in charge of the books. Well, we have to know the books. We have to pay attention to what's going on. And by all means, my suggestion was have mom split it now. If mom is having a hard time getting along with this particular sibling, then split it now so that it's done. There is no fighting later. Mom can still own her majority membership while she's alive of the LLCs, but can they be split? Meet with the attorney, meet with the accountants, see what that's like. And on top of it all, she said, well, the bank is going to drop us at the end of the year. After 40 years of being with the same bank, the bank is going to drop us. And I said, who dealt with the bank? Dad dealt with the bank. The bank can see the writing on the wall because nobody's getting along or communicating. They can't have a family meeting. So what does the bank say? No, thank you. Since Dad passed away, finances are going like this. I don't want to lend money. And can we blame the bank in that situation? Nope, we cannot. Could they handle it a little bit better? Could they give the same suggestions that I'm giving? Could they bring in a mediator? Yes, they could do a little bit better in that avenue. But at the end of the day, if they don't want to do that, if somebody came to you and a couple wanted money and they look like they're on the verge of divorce, are you going to lend them some money? Probably not. So why do you think that the bank should lend money? I mean, this is all stemming from this relationship. That needs to get fixed. Her daughter wants to farm as well. And so if her daughter wants to farm, then we need to save some of that for her daughter. But at the end of the day, we need to put our business hat on and not our worker hat. Because it's great that we want to go out and we want to work and we have ideas. But if we're not the business person, how are we going to run our own? We need to pay attention to all of that stuff that's going on and figure out what are we going to do. That had not crossed her mind. And so I was just throwing out ideas. The next step for her, you go to the bank, you go to the attorney, you go to the accountant, you go to mom and say, what do we do to resolve this? Because I have a feeling that we're not getting along, but if all we did was communicate better, it might be better, right? We might need a mediator to come in and talk about those things. But in that situation, starting a policy for her She has very little income from the corporation that pays her. So in that aspect, due to her age, we can't really start a policy. I mean, the policy is going to be very, very small. Very small. That is not going to help her go out on her own. As much as I would love to tell everybody that infinite banking is the end all, it's not the end all. It helps us get away from the bank and gain control, but it is not going to generate this awesome amount of wealth if we don't put it in. Nelson always said, if we put peanuts in, we're going to get peanuts out. And sometimes we have to start with peanuts, which is okay. But when we start with peanuts, but we need elephants, we can't, the time to get there when we are looking at a certain age sometimes does not work. Doesn't mean we don't get started, just means that if we want to farm this massive operation, we better figure out a different way of how that's going to work. How are we going to get there? Do we need to make extra income on the side? What does that look like? Okay. Big deal. The policy cannot fix the lack of wealth coming into the policy. That needs to happen, and we need to do something, even if she has to go buy some of her own animals. Great. Now you've got your income coming in that doesn't have to go through the corporation. But if we don't know the books of the corporation, how are we going to manage our own stuff? Lots to be learned there. Tons of possibility for her. Absolutely tons of possibility. But this is a transition from dad passing away down to the kids who were either never taught, never talked to. Dad took control. If we are not passing that information off to the next generation, the failure is not because they lack, because they're too stupid to understand, right? That's what a lot of people say. Well, my kids don't get it. Okay, did you teach them to get it? Did you ever put them in a position to make them responsible for that? You just die one day and think that it's all going to be okay. You never taught them that. You never talked about those things. It is equally mom and dad's responsibility as it is the younger generation. Now, if mom and dad want to teach that and the kids don't want to accept it, okay, then we can put some labels on them, right? And say they're irresponsible. But if that's not the case, because we never taught them, now we pass away and oh my gosh, we might lose the farm? And mom doesn't have the backbone to stand up to both of them because she wants to make everybody happy. There is always one of those parents as well. And it is typically mom. Dad typically did everything, took care of everything, but mom needs to have, or whoever the survivor is without the backbone, needs to say, you know what? No, we are going to fix this. You two are going to sit in a room. Or neither one of you get anything. Right? Every relationship has one. In my personal relationship, it's not me. I'm the backbone. My husband is so nice. It's ridiculous. That's not me. But we have to understand that. Good morning, Shane. Hey, Josh from Canada. Well, good morning, Brandy. I was wondering where you were. Hey, Caleb. All right. Next guy. This was fun. I always love it, and I always know when people listen to all the books, they listen to all the podcasts, and Enrique is watching, so I'm going to pick on Enrique. He listens to everything, and so the meeting is like, yep. They get it. They're ready to go. It's so funny. And so this guy, same thing. Listen to all the books, listen to all my podcasts. He knew exactly where we were going. He just needed the one piece of the equation of how is that policy structured? What does that look like for me? You know, how do I use it in my operation? So So it was kind of fun. But he is farming with his in-laws. He's ranching with his in-laws, and they want to sell to him. So they're preparing, like in 3 years, that we're going to have some sort of a transition. In-laws are possibly buying some more land. So there's just a lot going on there. But he's running some cows on the ranch that he works for, and he's running some cows on his in-laws' ranch. The one thing that he has gone to, they've kind of talked to a little bit of a financial advisor, he said, which, okay, I'm just going to say it. Financial advisors are not people to do estate planning. They are financial advisors. So don't just think that your financial advisor is going to do your whole estate plan. I'll just get off on the tangent now. My thing with estate planners is they don't really think big terms. Like I'm not seeing, there's very few that think outside of the box. And I particularly love Jolene Brown because she covers a lot of things. Now, life insurance is always the one piece in that estate plan that is missing. How we're buying the land is missing. And I don't know if estate planners just don't. And I shouldn't say no, it's not every single estate planner. It is most of them. What happens is if you're going to go buy land from mom and dad or the neighbor, I don't really care who you're buying it from, they have to pay capital gains. So the big reason of why we're not selling ground is because we're going to have to pay capital gains. Well, guess what? Don't sell it for so much. Jack up the interest rate, drive down the cost per acre. At the end of the day, we make the same amount of money. And so in this scenario, I said, okay, here's the deal. Before you do it, this is what you're going to be told. He should sell it to you at $400 an acre, because where they live, ground is basically worth nothing. So they're going to sell it to you at $400 an acre at 2%. Instead, charge you 6% and, a couple $100 an acre, whatever it worked out to be. I have a calculator that figures it all for me. So charge less per acre, more interest. At the end of 20 or 30 years, mom and dad or the neighbor or whoever's selling the land got the same amount of money. So we don't have to worry about them getting shorted, but they have to pay less in capital gains. They pay interest income, which is passive, and then the guy buying it has all this interest expense, which is also tax deductible. So we have to be smarter about it. And he was like, oh yeah, they would have not taught us. They would have not brought this up. Well, no, of course not. Because A, he's not a financial, or he's not an estate planner. He is a financial advisor. And you have to figure out how are we going to make this transition? But good information for him to have. Mom and dad are still young enough. They're only like 62 and 65. Dad had the COVID, so he's still having problems with COVID. So he's not insurable at this point. You can have COVID and be insurable. Insurance companies don't care as long as you have recovered from COVID. He had COVID and is still on oxygen, and it was really bad for him. So now he's not gonna be insurable until the doctor says he's good, everything's back to normal. Mom, though, is only like 60 or 62, so we can still do something on mom so that he has the money upon their passing to either buy out a sister-in-law, to, buy more cattle, pay down some debt, whatever, it doesn't matter. Ideally, we're going to put that into more life insurance, but nonetheless, we've got the death benefit for the what-if case. And I always am the what-if person. Not that I want to have a negative thought process, but I typically don't ever see anything amazing happen when somebody passes away. So there's that. Those two as well, young, very frugal, putting money into investments all the time. It took him 2 years to call me from when he first read the book, because he is a finance guy. He likes to put money into Roths and IRAs, and he's got a lot of money in investments, and they max those things out every year if they can. Well, guess what? It's not liquid. He can't access it, and he wants liquidity. He is now seeing that, geez, if I had liquidity of that money, I could, buy some more cows. I could buy some land, whatever it is that he wants to do. And so that light bulb is finally going on, because it's getting closer to him needing to do something. I am not a fan of a Roth. Yes, it's going to grow income tax free, just like a life insurance policy. However, it's not liquid. We have interrupted compound interest, right? If it was earning interest, it's interrupted. So we have penalty to take out the growth before 59 and a half. It is growing tax-free. That is the only thing that it is doing. And he agreed. He said, this is why I like the policy. Not only do I have liquidity and it's growing, I have a death benefit attached for my spouse and my kids. Another one that is ranching with dad. I had tons of young people again this week, and I love it. I have another one that is ranching with dad, and he and his wife have some acreage that they have some cattle on, and then he's got some more cattle that he actually leases to dad. That's the first time I've ever heard of that. So, just makes sense, right? But I don't know why more people don't do it. So he has cows that he doesn't have land for, so he is leasing the cattle to dad instead of leasing ground from dad, which is awesome because he's getting the money to pay for the cattle rather than having the expenses. So, and dad has the expenses and most likely needs the expenses. So that works out pretty good for him. They just bought land and they just bought the cattle. And I did not have good numbers because they did not have projections. When we meet, I really, really, really like and need to have numbers. If we've gone through a big transition, 2 months ago we just bought land and we just bought cattle, you should have projections because you couldn't get a loan without them. So at least have the projection numbers ready for me. They did not have that. So ultimately, I'm going to go and start something super duper small after they've reviewed their projections. And so that was my suggestion to them is go back, review your projections of what you should have, and then we're going to start something very small for you guys. And because they're only in their 20s, we can start something very small and then we can get going from there. Not a big deal. They'll most likely have more than one policy. Hi, Erica. Thank you. I always like to provide information. That is the goal. Even though I get off on tangents. Another one, he has an off-the-farm job, and they have just a little, I forgot what his acreage was. It was pretty small. I want to say 8 acres or something like that. And then he does lease some ground that he will run his cattle on. But he has an off-the-farm job, and he has no intentions of quitting that job ever. He likes the off-the-farm income. If it happens, it happens. He's not I need to be out of that job in X amount of time. That's not where he's at. But he's doing a lot of regenerative ag, urban type farming. So he's raising a lot of rabbits, quail, cattle, pigs. And it was very interesting to hear about the rabbits and the quail and how quickly they turn money for him. Now, there has been a little setback due to COVID because a lot of the rabbits are your higher end restaurants. I learned a lot about rabbits. I did not know that these rabbits are big, like the size of a chicken, and have that much meat on them. And so even to start to go direct to consumer, because they eat them themselves, that's the majority of their diet is the rabbits. A hard sell because people think that they're cute and they don't look at them as a meat opportunity. So, and I learned a lot about the fact that there's just diseases that are going around, and so I learned a lot about rabbits. It was a fun conversation. But he is not doing he has no loans. Zero zilcho. House is paid for. Vehicles are paid for. No credit cards. No student loans. They are doing phenomenal, but using cash for everything. He too listened to the books, listened to all the podcasts. He was ready to go. He basically listened to me in silence and was like, "Yep, okay. I had one question. Let's get this thing rolling." Because I said to him, "Okay, you paid the house off. How much was that?" He's like, "I know. It was $1,000 a month. That needs to go into a policy." Yep. So does the pickup payment that you paid for. What are you using for operating? Right? Some of those things we need to slowly move over into a policy so that we can start building that, and then he's got that to buy side by sides, to buy equipments, to build chicken houses, rabbit houses, whatever, bucks, whatever he needs for breeding. Those things can then come from the policy. And he got that, but that is a place that I'm always going to ask you. Well, not always, but a lot of times I ask, have we got done paying for anything recently? Because if we just paid something off, Nelson will tell you you need to be an honest banker and keep paying that to yourself. That then starts another policy, if we can and if it's enough money. Let's see, make sure I got everything on him. Next guy was not a farmer, didn't come from a farm, doesn't want a farm. He is a real estate investor. So yes, I do work with people that are not farmers. He is buying properties, flipping them, and then doing it all over again. He is a contractor. So it's very interesting. He has a relationship because he knows how to do the work. There's a broker, a real estate broker that buys a property, brings him in. They have a corporation together. He fixes the houses, they flip them, they sell them. This guy has a crew of 5 people plus his subcontractors that he works with, but he's also doing houses on his own as well. And so he bought a house through a hard money lender. What that means is that somebody with money that does not want it invested in the market, and they're just sitting there on a ton of money, say, well, you want to borrow money? I'll give you money at 10%. Most of these hard money lenders right now are lending at 10%. So they buy the house, they own the house. So let's say that I am the hard money lender. And I've had people ask me this, so I know enough about it to be dangerous. So I buy the house is in my name. He comes in, he fixes it up. When it sells, then I get my money back plus the 10%. However, this hard money lender said, I want you to have some skin in the game. You need to put $20,000 down. Let's say the house is $100,000, $120,000. I'll give you the 100 at 10%. You give me, but you got to put 20% down. Or $20,000 down. And so what's going to happen is when he sells this house, he's going to make $20,000. So that can then, and profit $20,000. So that $20,000 can go into a policy right away. It's not going to be a $20,000 premium going forward. It's going to be I think his policy premium is going to be like $5,000 a year. No. It's going to be about $10,000 a year. Year 1, we can put $20,000 in. So now he can turn around, borrow against that to put down on the next house, because he's going to need hard money lenders until he's flipped enough houses to have enough cash to buy one on his own. But when he does, the house he buys on his own is going to come from his policy. And he will have more policies along the way. I don't know if he's going to be a client just because of the fact that he talked to 2 or 3 other agents, and those agents didn't know anything about infinite banking. I had a couple of guys like that this week. They've talked to other agents, didn't know anything about infinite banking. One guy told me this week, he said, in 10 minutes, I knew that agent didn't know what the hell he was talking about, even though he told me he did. Oh, and that was his cousin on top of it all. They don't know. They don't know. If they don't know, they can say, yeah, I've heard of infinite banking. Okay, so you heard about it. Big deal. I've heard about a lot of things too. That doesn't mean I know anything about them and I can speak to them. So we'll see what he does. But at the end of the day, you don't need to be a farmer, right? These guys are investing in real estate and property, and even for his contracting business. How many vehicles does he need to buy? He has to make payroll, tools. You've got sheetrock, you've got nails, 2x4s. Like, you've got all the expenses, and he's using Lowe's and all these, and Home Depot, and he's using them as his line of credit. Could he at some point maybe get out of that and use the policy as his line of credit? Absolutely. Then he doesn't need to use those people. Got another guy off the farm. He too wasn't like he's not quitting his off the farm job either. He farms 250 acres. And what was interesting about him is, so he did not grow up on a farm. And so his dad just bought 80 acres. He's got 250 acres. When he passes away, he would like to buy the 80 acres from his siblings that his parents have, because it all kind of ties together. However, he did not, he doesn't have any, outside of a couple of loans, he pretty much is operating everything on cash as well, just because he has an off the farm job. But he said to me, I said, well, would you like to expand? He said, well, we can't because land is too expensive. And so he just has no desire really to quit his job, and this is kind of his little hobby. But he had not looked into regenerative agriculture and rotational grazing and all those sort of things. And so, again, I make my suggestions. If it works for you, great. If it doesn't, it doesn't matter to me. But he had not even really heard of it or looked at it or anything like that. And so hopefully, if he finds it beneficial, he can go that route and increase his operation with the same amount of acres. But his wife works for an investment company. And so it was interesting. They too, tons of money in investments. And he's like, it doesn't really make sense, because I need that money today before I'm 59 and a half, and he's in his 20s. So I want to use it now. I want to use it to buy cattle. I want to use it for operating, those sort of things. So we've got a decent amount of money. If you work off the farm, we normally have a decent amount of money to start a policy with. And when I say decent, I mean maybe 10 grand a year. Is where we can, it depends on your age and your income and that sort of thing, but that's a decent sized policy to me. It's a good start. Even $8,000 a year, $6,000 a year is a good start. But off the farm income helps us start. Why? Because the off the farm income should not be keeping the farm alive. If your off the farm income is what's making your farm money, you're not farming correctly. I don't care if you're teeny tiny or if you're really, really big. If off the farm income is what is paying the farm bills, you better figure out why the farm has not been profitable and how you can change that. Because you can't have one income supporting another one. Are you ever going to be able to make that transition? No. Are you farming correctly if the farm can't pay for itself? Something is going on. I'm not going to say you're incorrect, but something's going on. Financially, we're not marketing, we're overspending. What is happening that one is not supporting the other, or that one has to support the other? We don't want them to support the other. It does, Enrique. Okay, and then I had, this one was so fun, even though they'll most likely not be clients. It was such a fun conversation. These people were in their her husband was not on the call. And, for a reason, because he didn't even know she was meeting with me. He didn't know she read the book. She has to gather the information, take it to him, and relay it because he is fairly untrusting the way it sounds. But this was awesome because they were in their 60s, or they are in their 60s. They're not dead. They weren't, they are in their 60s. But in the 70s, they came from another country. And I'm not going to say what country it is because it's super small and very few people come from that country. So I'm not going to tell you the country. But they came from another country. They said they landed in New York, headed out, worked for a farmer for the majority of their life because that's all they wanted to do was farm. And that farmer sold him the land because he was a hired man forever and they worked their butts off. So another one of those very awesome transitions that you don't have to be a farmer, because if the farmer doesn't have kids or the kids don't want to farm, you've worked for there forever. There are good people in this country. So they are farming, but they have a huge line of credit because not only are they farming, but he's buying and selling equipment. And they've got other businesses. Mistake number one, everything is under one entity. Those should not be under one entity. But he is buying and selling stuff all the time, so this line of credit is never paid off. But here's the thing. They are using their land as a line of credit. And the bank is going to give them 10 years to do so. So they can borrow and pay back and borrow and pay back, and it's just a revolving line, which is absolutely fantastic. But she is concerned about what's going to happen in 10 years. We need to have that money, but it's inventory sitting in the yard that hasn't been sold yet. And the second he sells it, he is going and buying something else because that's what he does. That's what he enjoys. And he makes, 10 to 15% doing that, which is an amazing rate of return. So she wants to control that. Now, the thing that held her up is because of their age, there's not a lot of flexibility in their premium because they're in their 60s. And so there's some, but there's so little that I just tell people don't bank on it because you only have 10 years of premium in their scenario. So I don't know how that's going to work for them, but nonetheless, they have the money to start putting it in and rolling it. But here is the comparison. They're using their land. So think about this. If you have your land as a collateral to your line of credit, your land is constantly growing in value. Very little land is going to go backwards. So the land is constantly growing in value. You are borrowing against it. The land is cash flowing for you, correct? He gets to plant, he gets to harvest, we've got some cash flow. The problem is the bank is getting the interest. They get to keep the profit. He has his livelihood up as collateral, and ultimately the bank has control. What if you used a policy? Same exact scenario. The policy is collateral. The policy is growing in value. The policy allows us to borrow the money to create cash flow. But our death benefit is going to be the ultimate collateral to that loan. If he passes away, it's going to come out of the death benefit. We didn't put the farm up as collateral. He has control of that loan. We are doing the exact same thing in the policy. The difference, we have control. Our death benefit is collateral. We get the profits. When the insurance company makes interest, some of that interest is going to be a profit to the company. Guess who gets that? We do, in the form of a dividend. Many of us are borrowing against our land to do other things. The policy is going to do the same thing. It's just called a life insurance policy. That is the part he has to get over. He absolutely despises insurance. I don't even think they had life insurance. I don't think either one of them had life insurance. Because he doesn't like it, right? But he didn't even show up for the meeting, which means we're super bullheaded and we don't want to be open to learning anything. I am not banking on these two being clients because of that thought process on him. She gets it. We have to figure, okay, now we don't have flexibility in the policy on either one of them. So that's a little bit harder, especially with commodity prices the way they are. But if we don't know if we can make that premium payment, put it in your books. Add it to your expenses. You have a premium of X amount. Does everything still cash flow? If you're keeping your books, you should be able to just put it in as an expense. Life insurance, at one way or another, should be part of your operating costs. It should be an expense to do business. Because without it, you're completely throwing your business away. You're completely throwing your farm away. Why would you do that? So super fun conversation. Oh, and the other thing about them is don't tell me that you can't get started. Don't even go there with me, because I have so many clients that got started with nothing. Family never farmed a day. And they have started, and these guys came from another country to make that happen. And no, it was not Mexico. They came from another country to make that happen. And they made it happen. And there are people within this country who say we can't do it. Well, do you want it bad enough? It can happen. It's not going to be easy. But it can happen. That was super fun to me. Because she had an accent that did not fit where she lived. I was like, where are you from? Okay, that was this week. I had some other meetings along the way with people that were getting policies started. But I don't think that there's much there as far as anything else to share on that front. As always, if you have not gotten these books, you can go to farmingwithoutthebank.com or Without the Bank, and you can grab them. And yes, they are on audio. You know what, though? I had a guy email me this week that said, Mary Jo, I need help. I shared this on the page. I'm going to paraphrase here. He listened to it on audio. He did not want to wait to meet with me, so he met with another agent. Now his policy's wrong. And now he wants help. I'm only out like 4 weeks or something like that. And I understand when you read the book and you're excited and you want to start right away. I totally get it. But his thing is then he got the actual hard copy and he saw the numbers and he's like, oh, that's how I know my policy's not right. So even if you're going to get the audio, it's not a bad thing to add the book on as well. Or buy the book and add the audio, just because you're going to get to see the numbers and see how that works. I love audiobooks. It takes me longer to read, but I like to read it, or I like to listen to it, see if I like it, and then I'll go back and buy the audio. Or if there's a lot of stuff inside the audio that I need to see, because I'm a very visual learner, then I want to make sure that I have the book. So please grab the books as well if you want to really see everything, but you can get them as a bundle. And so if you want to add Nelson's book, you can get them as a bundle and save a little bit of money there. But go to the website. If you need anything, you know where I'm at. Email me, maryjo@withoutthebank, or you can message me here and I'm happy to answer. Otherwise, that's all I have today, you guys. You have a fantastic weekend, and we'll see you next Friday, 7:30. Have a good one.